Hello everybody, I hope you guys are having a fantastic day. In today's video, I want to talk about hims and hers, or HIMS stock. This is a stock that's gaining a lot of popularity, a lot of eyes, and a lot of airs. Some popularity is good and some popularity is bad. You see, you have bulls and bears on both sides of HIMS. One reason why HIMS is getting so much attention is because of its triple beat. It beat on the top end, it beat on the low end, and it beat on forward-moving projections. For example, its EPS, its revenue, and they increased their full-year guidance. As a matter of fact, they increased their full-year guidance by a full $20 million. And they actually beat by several $million. Now, this is no small feat. They're bringing in $209 million this last quarter two of 2023 alone. But the craziest part about HIMS is it's literally growing at a massive 83% year-over-year growth. Last quarter, 88%. And for full year 2022, believe it or not, it grew at 97%. You heard that correct. Nearly 100%. HIMS is literally the definition of hyper growth. But at the same time, HIMS literally dropped from $12.50, which is a 52-week high, all the way down to around $6.80 during normal trading hours, last time that I checked. And the question is, Adam, if HIMS is so amazing and it has all this crazy growth, why is the stock price going down? Well, there's actually some short interest on HIMS, actually a lot of short interest, and there was actually a short report that came out from Spruce Point. The short report, I read the entire report. I'm going to leave a link to it down below. I highly suggest if you are a bear or a bull that you read this report, because at the end of the day, you need to hear the good and you need to hear the bad, and you need to figure out what's in actuality down the middle. For me personally, I love HIMS. I use HIMS on a daily basis. I use it literally to grow back my hair, and if you guys have been paying attention, my hair is slowly starting to come back again. It's nice and thick again. It's not completely see-through like it was for the longest time. Because I started using him and hers product, and this is not a sponsored video, although HIMS should be sponsoring me, but they never got back to me. Because I use their product and because it works so well, and I've been using it over the last several years, that's when I started investing in HIMS. And I started investing in HIMS and I saw, wow, this company is growing at a crazy rapid pace. Currently, HIMS has 1.3 million users, growing their user base by 91,000 last quarter. And for the last 3 or 4 quarters before that, they were growing it at an even more impressive rate of over 100,000 users every single quarter. That's a 74% growth rate for users. And the numbers show that if you're a user for 2 years, that you are over 90% probable to be using HIMS. That means that they have a 90% plus retention rate for people using HIMS more than 2 years. That's absolutely massive. I mean, the numbers don't lie. The numbers keep going up, up, up. Not to mention, HIMS has over $200 million of cash and cash equivalent and nearly $0 in debt. HIMS has a shit ton of money. HIMS also has a lot of investments. HIMS is also EBITDA profitable. EBITDA is earnings before interest, taxes, and amortization. That basically means, in very simple terms, does HIMS make money when selling their product before you go down to all additional costs? Like dollar for dollar, does HIMS make money on the products that they sell? Like, are their products able to sustain them before going into taxes, amortization, interest, things like that? And the answer is yes. As a matter of fact, they hit positive EBITDA 1 year in advance, over 4 quarters in advance. With that said, next year, it is perceived, it is anticipated that HIMS is actually going to be GAAP profitable. Now, GAAP profitable is general accounting accepted principles. And GAAP profitability is the next step after EBITDA profitability or positive EBITDA. That means that not only are you able to sell your products and make a profit, but you're able to sustain that profit after taxes and all other fees. At the end of the day, GAAP profitability is good. And GAAP profitability is what Wall Street looks for to give you a lot of bumps in the predictions of your price, to give you a forward PE, so on and so forth. Now, Spruce Point came out with their article, and in their article, the negative or the bear case scenario for HIMSS is that they're coming out with erectile dysfunction medication for over the counter. Now, this medication is going to be available in 2024. And you have to start asking a question. Well, if HIMSS relies 50% of their revenue from ED medication that's prescribed, is this or is this not going to affect the bottom line of HIMSS? Now, the specific medication that's coming out for over-the-counter is one topical gel. But there's probably going to be more over-the-counters that are going to be coming out, if I had to predict, in 2025. So we still have some time until that happens. To counter this, I believe HIMSS is getting into new product lines. For example, cardiovascular cardio medication that's already starting to come out. And by the end of the year, they're going to have Weight Watchers or weight medication. And let's be honest, America has a weight problem. We're obese, we're fat, we're lazy, we don't want to work out. We want to take a magic pill that's going to make us better. At the end of the day, you need to ask yourself, is HIMSS going to keep prospering? But the funniest thing about this short report, that has many other things, but for me, that was the main thing of the short report, was that they see HIMSS going down 25 to 40%. Guess what the price of 25 to 40% is based on the time that they came out with that report? The price of HIMSS would be right around $5.25 to $6.50. Well, lo and behold, the price of HIMSS right now is right around that $6.80. So the short report might have been right, even though they might not have been right, if you know what I mean. The price of HIMSS is starting to become extremely juicy. This entire year, people were asking me, Adam, should I get into HIMSS? It's $10, $11, $9, $8. And I said, don't even start looking at HIMSS until it's under $8, or at least that's what I would be doing, because I already held shares of HIMSS. Right now, I don't hold too many shares of HIMSS, and more so, I hold a lot of options for HIMSS. I will be adding to my position of HIMSS, but to be honest with you, I'm in no rush, and there is no support when it comes to the price of HIMSS. And although I don't agree with the short report, I do truly believe that there's going to be a much better opportunity to get into HIMSS. We did not hit the bottom, in my personal opinion, but it is very difficult to time the bottom, especially for people that have full-time jobs, don't look at charts all day long, don't look at news all day long. And if that's the case, the best possible option for you is to DCA, dollar cost average, down. Let me show you some technical analysis, and then I want to show you some other charts. And at the end of the day, you make up your decision. But what I wanted to say is HIMSS is projecting to grow to $1.2 billion of revenue, and that is the floor. They're also projecting $850 million of revenue for full year 2023. And if you do the math, that's over a 40% growth rate from this year to the end of next year. If you believe that they're going to hit these numbers, which I absolutely believe they're going to hit these numbers, and they're probably going to go over 50% growth rate. So they're probably going to reach about 1.3 billion plus in revenue, in my personal opinion. I believe that HIMSS is going to fly. One of the most interesting things about HIMSS is it not only triple beat expectations this quarter, they actually triple beat last quarter. As a matter of fact, I believe in the last 7 quarters, they actually met one quarter, and the other 6 quarters, they beat expectations. Specifically in the last 2 quarters, they absolutely destroyed expectations, but the price of HIMSS keeps going down. There's a lot of shit talking and a lot of hate about HIMSS, and I'm going to let you make your own decision. But at the end of the day, I use the product works, and their numbers keep hitting, and hitting. So if the numbers are hitting and people are hating on them and the price is going down, what are you going to do? Eventually, it becomes such a good deal that it's you know, impossible to overlook. And right now, the price of HIMS or the company of HIMS is being overshadowed by a lot of hate and questions. The thing is, everybody has ifs and buts, but at the end of the day, ifs and buts is not what brings us the returns. Yes, HIMS can fail. Yes, competition might come. Yes, over the counter might destroy them. Yes, their physicians might stop working with them. Yes, their pharmacies might close down. But at the end of the day, these are literally the problems with every single company that's growing in the United States and in the world. They might not be the same exact problems, but in general, every single growing company has questionable things about them. They have questions. That's the point of capitalism. Can somebody compete? Can somebody not compete? Can you keep cutting corners? Can you keep getting more profitable? Can you increase your margins? Can you increase your revenue? Can you increase your sales? Can you increase your customers? Until this point, HIMS has been doing a phenomenal job in being able to do that, even bringing up their margins to 81%, gross margins of 81%, which is absolutely astronomical and mind-blowing. Let's look a little bit of technical analysis, and then I'm going to tell you what I believe is a good entry point when looking to HIMS. Now, I know a lot of people do not believe in technical analysis, and that's okay. That's up to you. I'm just giving you my numbers and my entry points. You should not take anything I say as advice, and anything I say, including any other YouTuber, including any other person that, is making technical analysis or any other social media influencer, you should take everything with a grain of salt. I did this the other day, so these numbers are going to change slightly. You have 4 moving averages. You have a yellow moving average, which is 20-day. You have a 50-day, which is green. You have a 200-day, which is red. And then you have a 100-day, which is purple. In general, immediate short term is the yellow, 20-day. Short term is green. Long term is red. And the 100-day moving average in purple is the medium term. The price of HIMS is below the 20, the 50, the 200, and 100, and the 20 and the 50 is below the 100 and 200, which means, for all intents and purposes, this is extremely bearish for HIMS. They have no support. And the triangle is going down, descending, whatever you want to call it. You see this point right here. So it is imperative that HIMS stays in this section right here. HIMS should not go lower than this line going down right here. There's going to be a support level at $6.20. There's going to be a support level at $5.70. And then there's going to be a support level at $4.20. Personally, I would wait until HIMS comes closer to the low $6 range. If you can get it at the $5 ranges, this is a load the boat scenario for me personally. And if it happens to go under $5 in the $4 range, well, I think that you can't go wrong, specifically if the numbers hit the way that they say the numbers are going to hit. This is technical analysis based on the price. The reason why you see these little, stop signs with the lines and where I get this from, these are the last support levels back here. The reason why these are the last support levels back here is because HIMS literally went below all other support levels right here. There is no more support levels. These are the support levels, which is bad. If you want to get some more technical analysis, I'm going to do it really fast for you guys. This is the RSI. RSI stands for Relative Strength Index. Anything under 30 means that it's oversold. Anything above 70 means that it's overbought. We are at the lower end, which means that this drop or this bear market or this bearish sentiment might be over sooner than later. By sooner or later, it can still mean a month from now. But you have 2 lines here, the yellow one, which is the moving average for Relative Strength Index, and the purple line, which is the Relative Strength Index. We want the purple line to break through the yellow line. We want the Relative Strength Index above the Relative Strength Index moving average. But it didn't hit. You see, it went here, it bounced up, and then right here, it retreated down. This is bearish. You don't have to believe what I'm saying. You don't have to believe in what I'm saying. You don't have to believe me. And I highly encourage you to do your own research. But for all intents and purposes, this is bearish signals when it comes to price. But for all the people that wished and prayed for the price of something to drop, this is becoming a ridiculously good value. But with that said, I don't think the price stopped falling yet. Let me show you something else. This is called the MACD. The MACD is also showing us bearish signals. You have the blue line right here, which is the MACD. And then you have the orange line, which is the signal. And then you have this 0, 0 line right here. What you want is you want the orange line and you want the blue line to be above the signal line right here. I'm sorry, be above the neutral line right here. Also, what you want is situations where the blue line is going to go above the orange line. So you want something like this. You want something like this. And you want both of them to be above this right here. At the end of the day, everything that I'm saying with technical analysis might not mean anything to you. You might believe in it, you might not. Again, I'm explaining to you my thesis in general, not just technical analysis, but I am adding technical analysis for the people that want technical analysis. If you guys want to know what options play I am doing, I will show you what options play is looking good to me. If you're going to go into hymns, and you're going to say trade him options, I am going to go into January 2025 because I want to give it some time to grow. I have these options right here, $22 strike expiring January 2025. I also have $20 strike expiring in January 2025. Today, this lost 30% in value. Today, this lost 15% in value. You can see what is a good value and what is a bad value. I like to buy in on bullish positions of mine that I believe are going to really shoot up again. And I do believe that HIM's fair market value is at least $15 a share. That I like it when these things really get beat up for the day. The $15 strike and the $17 strike have been really popular. I've been, following up on these options plays, but essentially these are interesting options plays right here. If you're super bullish, do the 22, but $15 is probably your best bet. $15, 80% premium, January 17th, 2025. I'm not going to get right into the options right now, but if you guys want more options videos, become channel members, and I'll be happy to explain a full video of options, whatever options plays you guys want. Guys, thank you so much. I really appreciate you guys watching. I'm going to leave a link to the report down below, the short report. Feel free to go through it and let me know what you guys think below. Thank you very much. And as always, I really appreciate you guys. Have a great day.